All right, hello and welcome everyone. Doug here with the LincolnList.com, and let me welcome you to today's trading lesson where I'm going to talk to you on what I think is the very best and the easiest trading strategy, not just for beginner traders, but also for those out there that are struggling to have consistency. I'm going to show you a simple, easy method to start seeing advanced results in your trading account. And something that you can put into your toolkit. And for some of you, it may actually open up the doors and start helping you see more consistent results. Now, I'm going to do this by explaining this in 3 steps. The first, I'm going to tell you what this is. Then the next thing I'm going to tell you is why this type of strategy works. And third, I'm going to tell you how you actually use this and start to implement it. So let's first talk about what is it. We're going to call this the Checkmark Reversal. Now, I know some of you that have seen this channel before, you know about the checkmark pattern. You know what that is. You also attended the Checkmark webinar, but we're going to take it a step further here and get a deeper understanding, because the checkmark pattern and the Checkmark webinar that we discussed focused a lot more on the targets and the whole entire process. What we're going to talk about here is the actual entries and how we're going to find these stocks. So for the sake of that, for all the new people out there, or for those that don't quite understand the checkmark, or you haven't even attended the webinar, I will put some links up here on the screen or down in the description box. But I want you to understand this basically in your mind first as a reversal strategy, okay? But I don't want to call it counter trending. That's a bad term that a lot of traders use out of just a lack of enthusiasm or a lack of explanation. It's not counter trending. It's reversing, but you're staying with the current trend. So what I'm talking about here is you're looking to buy a stock that's already in an uptrend. You're just not looking to buy it at the high of the day. And this is what's really important. But the reason that it works is you are staying with the overall trend. Deeper into this is that you are buying. Your execution that we're going to talk about is the most important thing. Now, one of the reasons that most traders fail, and especially I know this after 2 decades of teaching people and trading myself, one of the biggest reasons that people fail, and we've talked about this before, I'll post it on the screen, is that a trade takes 3 components. You have idea, execution, and you have management. Most traders will either fail on the execution part or the management part when it comes to trading. That means most of us can find a good stock to trade. Most of us can find good ideas. The problem that a lot of us have, especially struggling traders, is trying to find the right time to buy it and the right time to sell it. And with this simple pattern, I think you're going to find that that's going to be a lot clearer. So that's why it works. The focus that we're going to have today on this, unlike the checkmark webinar and checkmark pattern, which was talking about targets, we're going to talk about actual entries here and why this positions you and the trader as the very best spot to do business. And of course, we're going to talk about how to scan for these and how to look for these. And I would probably think here at this point, most of you already have a dozen stocks on your watch list. You're going to see this pattern on it, and you're going to be able to execute it. The market has a canny way of shaking people out of trades. It does a great job of bait and switch and using tactics to fool people, to suck bulls in and then they smoke them. It's to get people to short down in a hole and turn around and snap on them. You are counter trending the herd because the herd normally chases stocks. Both longs chase and both shorts chase. So it's not uncommon that you're going to get a bunch of rookie FOMO chasers on a breakout, and you're going to get a bunch of FOMO chasers on a breakdown that's this aggressive. So let's take a look and see what a chart looks like in a real-time environment. So on the screen here, you will see a chart of Tesla. And if you remember the formula that we put together, the first thing that we're going to be looking for is a stock that is in an overall uptrend. See, there's 2 different types of trends that you're working with here. Shorter term trends and longer term trends. You can short a stock that has a bullish long-term trend. You can also buy a stock that has a longer term bearish trend. There's a lot of different ways that you can be fancy when it comes to trading, but it's always important for you, the trader, to understand. For this pattern, we are looking to stick with the overall trend, but we're looking to counter the intraday trend. So when we're looking at this Tesla, there's no question here that you have one huge uptrend here over the past couple of months, and here's where we sit over the last few days. So even though the action recently over the last couple of months has been somewhat sideways and choppy, the overall trend here is incredibly bullish. So what does this actually mean to you guys? Well, what it means is this is a dip buyers type of stock. People, institutions, when I say people, I'm talking about institutions, retail traders, investing brokers, all of those people are looking for opportunities to get in. So when you hear the old BTFD, it's the stocks that go up a lot that traders and investors, experienced ones, look for pullbacks, also known as sell-off periods, to get long the stock at better prices so it can be ready for its next move. So that's first, we've diagnosed that Tesla is a bullish stock in a bullish uptrend, and we want to pay attention to sell-offs, aggressive pullbacks, and opportunities for us to get in and let the algos take advantage. So we move up here to the upper chart, which will be the intraday 5-minute chart. And I'm going to focus on this day right here. And this is what I am talking about. Tesla starts to move up very aggressively in the pre-market and gaps up into this area of 437-ish, okay? And that starts the day. Now, you know there's a lot of people that bought it. But here's the thing. If you are buying this stock right here, you have a serious problem. And the serious problem is, first of all, you're chasing it. This thing has already moved up a good $12 to $13 straight with no break. So when I talked about that initial flagpole in the beginning, you are overpaying by this amount. Also, if you're familiar with the great support and resistance, if you look over here, you are right in to major short-term resistance that the stock has had significant problems in the short term of moving through, okay? So that is the worst possible place to execute. And I'll tell you why. First, if you're buying into resistance, you're doing it wrong. Don't ever do that because chances are you are going to be wrong on your trade. Even if you are right, it's either more of an issue of luck, which we cannot rely on, but also we talked about alpha. They'll be harder to attract buyers over high of day on a stock like this than it will be at low of day. Less money will be poured into it, so it's less likely that thing will even move much further than it has. So then what happens is what you normally can see. Now, for again, some of you advanced traders out there, these are great opportunities is to be shorting into resistance and buying into support, but we're going to stick on the buy side here. Now what happens here, because of all of these poor entries and chasers, they get smoked. They absolutely get steamrolled and this thing shakes out. I'm going to open it up just a little bit bigger so we all can see it. And it goes straight down. Now at this point, what people are seeing on this chart, let's see if I can actually do it here. This is what a lot of traders are seeing in this chart is panic, fear. Oh my God, I'm wrong. Oh Jesus, right? And they're all just smacking that sell button, but they're not thinking. They're not thinking as this is diving, if you're looking at it, these candles again are hypnotic, but if you take a look over here, you are now bordering in to major support from the day before, right? This is not a short. This is not a sell. This is a buy area. And then once you look what happens is it immediately finds some support and starts to produce a shorter term uptrend. Now, why is that? Well, it does that because everyone has already been shaken out and it hits support. Again, one of the reasons that traders aren't ultimately successful is because they're not paying attention to their positioning on the chart, because they are buying up here at resistance where it shows clearly in the chart, and this is why we use them. They're buying up in resistance where stocks are normally likely to sell off, where buyers are likely to sell positions rather than buy them. And that's not the side you want to be on. Down here at support is where the stock shows that it has the intentions on holding that level, at least for the short term. This is where you get long. The other thing about this is it allows you to have a clear, defined risk. If you're buying up here in an area like this, your risk is horrible because the purpose of putting stop losses on trade is when you are technically wrong, when the chart itself moves from bullish to bearish. Even though you had a sell-off, this is still not bearish. It isn't bearish because it didn't take out the low of the day. So it's still bullish. You just happen to be way, way out of the money on your entry price. Yes, it comes back later, but you can see what I'm talking about. Rather than being here and profiting, you're here and breaking even or a small loss. So technically this chart is still bullish even though it's selling off. And I think sometimes people feel that every sell-off is bearish, every rally is bullish, and that's not necessarily the case. It's just stocks don't, they go up and down, not up or down. It's sort of a whole process. So anyway, Tesla remounts here. You have low risk, but you have a high amount of reward. In this case, it doesn't move too much higher than this. And those that attended the Checkmark webinar know that the purpose of this, many times they'll actually go all the way back up through high. They don't always do that, but the point of this one here is it didn't go back to high of day, and that's okay, but there was money here. There was the potential for you to be positioned for a large move. And as you look at the next day here, it's the same scenario. Here is where it produces the gap up day. The thing gaps up, chasers start chasing in the morning, but look what happens. It immediately sells off into that gap support that it closed at yesterday or the day before and begins now a more massive, stronger rally. Okay? Same principle. You're buying it at support into either the gap or into a solidified area of support. So again, the thing is, a lot of traders just simply don't look at the chart before making decisions. You see a couple of panic candles like this, what do? Oh God, I want out. I want out. I'm gonna get smoked. I'm gonna get steamrolled. I was wrong. And they hit the button. Not realizing you're just a few pennies here away from support. But the purpose of this as well, guys, is not only is it putting you in the right position on the chart, it's allowing you to capture moves like this because you'd much rather be a buyer here than you would want to be a buyer up here. Again, the alpha, the breakout works here, but look how much that trader is getting. They're just scalping for pennies. They're just taking nickels here and just, you don't need that kind of pain in your head. You want to be down here. Now, obviously hindsight's 20/20 in a chart, but when you really look at it, you can time tops and bottoms, not to the penny, but you can get pretty damn close just by using simple support and resistance. The thing is, before you make a decision on a chart, you want to look at it and say, where am I? Where am I in relation to this chart? Am I at the bottom of the chart buying it? Or am I at the top of the chart buying it? Or am I just in the dead center? And let the logic of that sentence there sink in. If you're buying towards the lows, you're in a better position for a rally. If you're buying at the top, then you're losing all of that money that has already moved. You're only fighting for pennies up there. And if you're buying in the middle, you just hate yourself. What do you do in the middle of the chart? Who wins in the middle? Both shorts and longs are just getting destroyed mentally, which sometimes is worse than financially. They're just getting destroyed, and that weighs down on you. So look for these. In a review here real quickly, you have two types of setups. Let's first talk about quickly what we're looking for. You first look for the stock in an uptrend, a classic dip buy, even a cult stock such as Tesla, and you're looking for opportunities in that. So take the charts and the watch list that you have right now, look for stocks that are bullish uptrend, stocks that you like, that are doing well, the Neos, the Rokus, all of those. Then start looking for areas on charts where there are significant support and start setting alerts. Look for significant support. See in the morning if these things sell off or press down aggressively into those areas. Wait for them to base into that support, giving you just enough data to control your risk. Then you buy it. Your stop gets placed at the low of the day, right here. Your stop gets placed just under the low of the day, and then you let the stock go to work. Your target should always be the nearest resistance areas like here, and then here, and who knows, you may actually get more. That's a little bit more advanced, but the point that we want to focus on here is you're picking the great stock to begin with, not some pile of trash that you're just trying to catch a falling knife. There's a method to this. That's why it's not counter trending, because we're staying with the overall trend. We're just trying to counter the intraday move. It puts you in the best position for success. It helps you get the most alpha to the upside, and it keeps your risk low. And that's what this game is about, risk versus reward. And you do these over time, you will have much better success than chasing breakouts. So I hope this video made some sense to you guys. I hope you find it easy to implement into your business. If you're struggling with that, I want you to just reach out to me at support@thelincolnlist.com. I'll do my best to answer you the questions and help you with some extra details about this to get you pushed in the right direction. As always, feel free to visit me at thelincolnlist.com and see my free blog and trading education. Until next time, trade well and take care.